Hello traders and welcome to another video review. Today is Monday, September 4th, 2023. Let's find out what's going on the Forex economic calendar in the beginning of the trading week. There is no very important data release scheduled for today, so we are going to take a look at the medium important data releases. Some of them are, for example, the company gross operating profits from Australia, which are apparently just plummeting to minus 13% from 1.3% in the first quarter. Then we got data from Germany. German trade balance is narrowing to 15.9 billion from 18.7 billion. Data from the Switzerland are still ahead of us. GDP for the second quarter is expected to decrease from 0.3 to 0.1%. We got the CPI data from Turkey, and this time we expect the increase from 47.83% to 55.90%. There we have, of course, the Spanish unemployment change, some data from the Brazil, and during the late London session, early New York session, we got some speeches from the ECB officials and German BUBA officials. So we got the Elderson, then we got the BUBA President Nagel, Joachim Nagel will give a speech, then ECB President Christine Lagarde will give a speech, and then Lane and Panetta as well. So plenty of remarks, plenty of comments from the European Union, European Central Bank official, and the European Union German BUBA president. So it might be interesting to see what they have to say during the late London session. So because there is no very important data releases, it might be a good idea just to take a look at the majors in the beginning of the trading week. Let's take a look at the technical picture first of the euro dollar. The euro dollar dropped last Friday like a stone towards the technical support. So this level here is still not broken, 1.0766, the low from the end of the August 2023. Nevertheless, the bearish pressure, as you can see, is quite significant. So please keep an eye on this technical support. Any violation will open the roads towards the lower levels, and of course that would mean that the big hand and shoulders pattern is now continuing. The intraday technical resistance is located roughly around 1.0829, and there is one more level we can point out here on this chart. This is 1.0842. The market trades below 50 and 100 periods moving average, so the momentum is still negative, the momentum is weak. Bears have absolute dominance on the market right now in the short term, of course. So because of this big movement to the downsides, as you can see, and then very narrow and shallow pullbacks to the upside, and then again big smash to the downside, we can say that the outlook remains bearish and the market is under the control by the supply, by the bears generally. So what we should see here is some sort, maybe just maybe some sort of the test of, let me take the arrow, from of this zone, this level, and then the let's say development to the downside. All right, so this zone should be the one to watch, and of course the technical support is supposed to be the one to watch. We expect another downside movement on the euro dollar. So that was the euro dollar. Let's find out what is going on the British pound. This is 4-hour chart of the British pound. Let me just change it, 5 minute to 4-hour. The situation is quite similar to the euro dollar. They are very well synchronized. They are very well correlated these days. So what do we have here is, of course, the technical support 1.2547, and right now we can even place like a very short-term trend line, and as you can see, the market support and recognize this trend line. So we got this short-term trend line here. Let me just make it a little bit, there you go, a little bit visible for you. The intraday technical resistance is located at 1.2639, and then again we got the same situation. We got this level here around 1.2653. So no breakout above this zone means that we will, of course, reverse and move. Let me just put the arrow, there you go, move way lower. So the outlook is bearish again, which is supported by this weak and negative momentum on the 4-hour chart. The developments to the downside are way quicker, way stronger than the eventual upward pullbacks or corrections on the British pound. So we might assume that this market is under the bullish, of course, bullish control. So we should expect more downside to come, especially if the first the trend line is violated and then the local low at 1.2576 is broken as well. Okay, let's take a look at another major, which is US dollar to the Japanese yen. This is the 4-hour chart again. So what do we have here? A quite nice development to the upside we got here. So let's just take a look at a little bit closer. Of course, the trend is still to the upside, so we are continuing the uptrend. Recently, we got this correction towards the level roughly 144.55. The low actually was made at 145.51, so that's only kind of a 46. So that's kind of a 9 pips lower. Nevertheless, we hit the 30 level on the momentum on the RSI indicator, and then sharp bounce to the upside was made when US dollar appreciated across the board. Very short-term trend line resistance was violated here. So let me just make it orange as usual. So we got the bullish engulfing pattern into the previous support, and then the breakout of this short-term trend line, which means that we are trading now above 50 and 100 periods moving average on a 4-hour chart, and this is the big green bar forming right now, and it's approaching the intraday technical resistance at 146.55. Any violation of this level would be considered bullish, and the next target would be, of course, 147.38, which is the high from 29th of August 2023. So it looks like the US dollar is being right now appreciated across the board. So euro dollar is going down, British pound to the American dollar is going down, but American dollar, US dollar versus the Japanese yen is going up. So perfect correlation right now on the Forex market, at least in the currency market. Let's just take a look at some other market, not related that much to the let's say to the Forex, to the currency. Let's take a look at gold. That's what I mean. Let's take a look at the gold. What is gold doing? Well, if these markets are now highly correlated, maybe, just maybe, we should see more developments here to the downside on gold, because the US dollar is being bought all across the board. So what do we have here on the gold? We got the local trend line perfectly following the recent development. So the market recognized this trend line and bounces from it, as you can see. It might not be perfect, might not be textbook example, but it definitely works. Now what we have here is very nice bearish engulfing pattern, which means that the bears are coming into the market around the 1950 level, local high 1952. So this is the next target for bulls. Nevertheless, we hit the extremely overbought market conditions. There is a bearish divergence, negative divergence here forming on the 4-hour chart, and the last high was made on the definitely lower momentum. So we should see another spike to the downside. We should see another downside developments here, especially if the US dollar will help. to push the price of gold, at least temporary, a little bit lower. So what are the technical supports in that situation? So one is 1000 and 9022, and then the nearest one is roughly around 1916. So there is one more, which is the key technical support for now, is of course at 1903. So we should see another development to the downside, especially if the US dollar will develop as it is right now, appreciating across the board, and we should see spike to the downside on the market of the gold. So we should be considered as a temporary pullback or correction during the uptrend, local uptrend or local correction to the upside. So that's the brief overview of the measures for the Monday. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.